Welcome back. Well, the markets are looking pretty good, but let's focus, on a company that we were talking about, that's Steel Strip Wheels. Well, in a release to the exchanges, the company has announced that it's prepaid some debt. Over the weekend, they prepaid some debt, and just around 20 minutes or so ago, there was another prepayment that took place, and I think the total prepayment now goes to roughly around, 61 crores or thereabouts, and it brings its debt, long-term debt, down to around 442 crores odd. Well, we want to understand about this, but we also want to understand about business going ahead. Well, Mr. Dheeraj Garg, the MD of the company, joins us. Hi, Mr. Garg, good to speak to you after a while. Well, you have repaid some debt, so you're walking the talk out there. You've repaid close to around, 60 crores odd. Now, it's come down to around 440 crores. So what is the target from here on in FY23? How much are you looking to bring this debt down to, or are you done for now? Go ahead.
So, as I told you last year in March, that we will have enough EBITDA value to pay off our existing debt that is sort of getting our revenues going. And so we are on that track. We should be doing an EBITDA in excess of 450 crores. And by June, we would have enough money to pay off our old debt prior to this financial year. So we have a plan to pay off all our debt by next year. That was there on the 31st of March 2021.
So by FY23, you're saying you will be debt-free by the end of the year?
For the assets that we have created prior to 2021, yes.
Mr. Garg, let's make it simple for our viewers, your investors as well. Your debt is currently, long-term debt is 440 crores. What does that number come down to? Let's not break up the debt. Let's just focus on the absolute number, because your investors track the company as one company. So they like to know 440 comes down to what? Go ahead.
I'll give you a overall picture. So we had an overall debt of about 937 crores last year. And this year we'll close at around 770 crores. And going forward, we'll bring it down to close to 600 crores. So that is the current visibility we have. But you also have to understand that we've got a raw material price increase in excess of 500 crores. So even that we have been able to manage within our cash flows and not increase our debt. So I think it's more than that. Plus we've had a capex of about 100 crores last year. And going forward, I don't see much capex happening. So as I said, we should be looking to substantially bring down our debt. Another 170 crores prepayment will happen next year.
All right, take that point. 170 crores will be prepaid next year as well. Closer to, that 600 crores is what the company is aiming at by the end of FY23. Remember, the last year it was 937 odd crores. That's about the balance sheet. Let's talk about business itself. You had a fair amount of exposure to exports, right? You targeted close to around 750 to 1,000 crores in terms of export revenue coming in FY22. Where does that number stand at right now? What's the impact of the Russia-Ukraine situation? Because a lot of the European auto majors have, halted production out there. What happens to that part of your business? And you briefly alluded to raw material situation as well. Tell us more.
So in terms of export revenue this year, we're looking at about 825 crores, so which is not 1,000 crores, but because of a slowdown that we experienced last quarter in the export market because of supply logistics issues in America, and a lot of pre-buying had happened. So, but now we have the Ukraine issue, so we'll have to wait and watch how this goes. But going forward, we will have increase in export from the aluminum wheel side, which was not there last year. So that should add another 150 crores. So even if I assume a 750 crores or 800 crores benchmark for steel wheels last year and add another 150 crores, so we're looking at 900 crores odd. So this is all preliminary numbers. So this can of course change as we see how the war unravels. But more likely than not, we should be looking at another target of 1,000 crores this year, the same target.
No, so I didn't get that. You'll end this year with 900 crores of exports?
This year 825.
825, and the next year, that's FY23, it'll be 1,000 crores.
Yes.
So this year 820 crores, sir. Mr. Garg, just confirming these numbers, and FY23 you're saying it'll be 900 or it'll be 1,000 crores?
1,000 crores is our target.
1,000.
Yeah.
Okay, all right. We get that then. We want to focus on the other aspects of your business as well. But, a quick question. The stock price has seen a bit of a correction in line with what's happened to the markets as well. But, you had a large amount of your shares that were pledged. I think it was close to around, 45% odd. But you've gone ahead and you've reduced it. And I'm looking at the last updated number, it's come down to less than 20%. But we also need to take into account that the stock did see an up move. So the money that you had used this, for your personal or for another company that you're managing as well, I'm guessing that you've sorted out that issue. The point is, if the stock price starts drifting lower, will you have to top up and that pledge number starts going up as a percentage, or from 19.5%, this number just comes down? Go ahead.
I think we are not looking at any top-off. We'll be prepaying our loans. We are prepaying our loans. You're right. There has been an increase in the price, and that's why the pledge has come down also. But there has been a steady repayment of loans also.
Oh.
So going forward, there is no chance that we will look at topping up the loans.
You had given us a
anymore.
target that by the end of this year, your pledge would stand around that 15-16% mark. It's 19%. Do we see that going to that 15-16% mark?
So at the moment, I would just say that we will be around this number. But going forward, in the next year, we plan to pay off substantially to make it negligible, below 5%. My target for next year is below 5% for FY23.
Okay. All right.
You know, we've constantly asked you for a couple of things here. One was the pledge. The second part was you actually, going ahead, meeting investors. So you've done that. You've repaid some of the pledge, or you've reduced some of the pledge. You've started holding investor calls. You've started uploading investor presentations, etc. as well. Now the third thing, the dividend, that's something that we keep asking you. Last year as well, your EPS was close to around 60, 64 odd rupees. And the dividends that you're paying out are rather measly, 2 rupees, 4 rupees at best. I can't see anything more than 4 rupees. In fact, are you looking at increasing the dividend payout as well? What can the people expect?
I told you last time, we will meet at the end of this financial year and come out with a policy on dividends. Clearly, we have the visibility of free cash flows, and we would like to pay back our shareholders. And obviously, you will see some sea change there.
Okay. All right. So by the end, so maybe when we chat, maybe at the end of this fiscal and for your Q4 numbers, you could probably have a dividend policy in place. Is that what you're suggesting?
I think by the time we declare our results, you will see a dividend policy.
So we'll wait for the dividend policy then. I'm just putting the numbers together, and I think for this year you'll end at around 3,400 crores odd, going by the presentation that you put up, and you're saying that you'll do an EBITDA of around 450 crores. That would mean that margins will be around 13.3% approximately. For FY23 and from year on, given that input costs have spiked up, what should be the margin number? Or sometimes you're more comfortable in giving us an absolute number. So for FY23, what should your revenue look like? What should your EBITDA look like? And what should your margin look like? Please go ahead.
So I think in terms of absolute EBITDA, we are targeting 500 crores plus. Okay. And we are very confident that we will achieve those numbers because the domestic CB market, the domestic aluminium wheel market, and the potential to grow in the exports of the aluminium market are immense. And we are very bullish going forward next year. And obviously, you will see our interest costs drastically drop down and the net margins increase at the end. So in the end, we will be looking at 10% net margins. That is the target that we have taken to achieve, 10% net profit minimum. 10%
net profit margins is what you're looking at. 350 crores is what you're targeting. That means at a 30.
Yeah, right.
All right. And, your return on capital employed, it was sub 10% back in the day. You said that it will increase up to 26, 27%. You're on target for that as well, right?
Absolutely. And going forward, it should be a bigger kicker.
Okay. All right, Mr. Garg, you're sounding reasonably optimistic. Well, there is some pressure, I believe, in the in the auto space, but you've given us some numbers, and when we chat next time, we look for a quick update on that front. It's been good speaking to you. Look forward to having a chat rather soon.
Do this. You're still with us. Just a word on the semiconductor situation, because we've been hearing that that shortage has come back again because of the war. Just a quick one.
There's two news on that. My OEMs tell me that their pipelines are filled for 3 months, and even the semiconductor manufacturing companies have their pipelines for their raw materials, namely the gases, filled up for 3 months. And I don't see any reason why. And also the loss of production in Russia is supporting semiconductors in India because they produce about 1.5 million cars. And if they're not able to produce those many cars, those volumes will definitely come to India and Asia.
Okay. So in the near term, you're not expecting a big impact to your business. Got it. Absolutely. Okay, Mr. Garg, we've gone on for a goodish bit. Thanks so much for joining in. Well, time to slip into a short break. As we do that, here's something that you, our viewers, must take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a very special campaign, Informed Investor, and that empowers you to make the right decisions with your money. Investors need to check the frequency of account settlements that they've opted for. If you've opted for a running account, well, you need to ensure that your broker settles your account and sends you the statements of accounts regularly, and in any case, no later than 90 days. But in case you've opted for 30 days, then in fact the broker needs to settle and send your statements of accounts within 30 days.